Surged nearly 3% overnight after a strike halted Kuwait's crude exports and optimism about new measures to stabilise Europe's banks. In New York, light sweet crude oil for delivery in November closed at $85.41 a barrel, up $2.43 from Friday, while in London, Brent crude from November jumped $3.07 to settle at $108.95 a barrel. The Brent price was also supported after shipping sources said all oil tanker traffic from Kuwait, one of the world's top 5 oil exporters and a large supplier to Asia, had stopped after a customs union went on strike. And to look at how this is impacting commodity markets, I'm joined by Jonathan Barrett, Managing Director with Commodity Broking Services. Jonathan Barrett, welcome to the program.
Good morning, Whitney.
Okay, so crude has jumped off the back of this proposed deal from France and Germany, even though we don't really have any details of this proposal.
Yeah, it has. I mean, there's a whole lot of things which are helping crude along. But you're dead right. Optimism over the Franco-German pledge, I guess, is certainly helping crude prices continue to trade higher. I think it is a bit of a concern, I guess, because we need to see what's in the package.
It's presumptuous then, really, isn't it?
Oh, very much so. I mean, how do you put a plan together in 20 days for a $15 trillion economy?
How do you?
Exactly. Well, I think Merkel and Sarkozy certainly have a good idea of what they're kind of trying to achieve there. So we'll have to wait, but I think I'd be a little bit cautious about the rally. But certainly whilst it's running, you can certainly trade with it.
It is interesting, isn't it? Because it seems like they are putting undue pressure on themselves by not releasing the detail and gaining all this attention.
And this is one of the crazy things, because now the market will work to a deadline and they'll see whether or not they can deliver. And they'll look for little snippets of information on the way. And if they can't deliver, then all of a sudden everything gets reversed.
Now, some analysts are saying that optimism has returned to the market, but it's too soon to tell, really, isn't it?
Oh, look, it definitely is. I mean, the sheer size and the jump of the moves, not only in equities but in commodity prices, it's as if all of a sudden we're back to the good old days. And it's clearly not the case. And I think we still need to see more information as to whether or not it can be sustained that commodity prices moving higher, they are in fact there for a reason other than sheer weight of the US dollar and optimism. So it is a cautious time.
It's interesting too, because some of the commentary I've been reading has said that the market is now not pricing in a default for Greece, which I find quite astounding, really.
Look, unless people understand what the pledge is all about in Europe, I think it is a bit precautionary. What I do think also is the other side of it is that what's happened in the US in terms of Obama trying to get his packages through. So there are still significant headwinds out there, but the market looks to have just brushed it aside.
Does the Asian currency situation with China and the US have any impact on commodities? I
think the currency wars, or the potential currency wars, I think are still there. But one good thing to note is the actual yuan appreciated to its highest level against the US since 1993. So that's going to sort of alleviate some pressure on those tensions that we have seen. So if anything, that's moving in the right direction. So I don't think it'll apply too much pressure at the moment, purely because the yuan is in fact strengthening.
So you're not of the view that we will get to a point where we will see trade sanctions and a potential trade war?
I think it's a tug of war of information, that's all it is. The economies, both economies are too important for each other for one to get annoyed with the other. They're just relying on each other, so I think they will do a lot of persuasion, a lot of politician, but I don't think we'll get to any concerns.
OPEC says it's unlikely that it will change output of crude as the group is satisfied with current price levels. So what would happen to change that?
I think OPEC have come out and said that but OPEC have also turned around and said, well, look, we're going to reduce production. Their quotas purely because of those members of OPEC that supplied, or the shortfall when Libya went into a civil war. So they're going to start to wind back that additional supply. Now, they won't change their quotas, but you'll find that supply will be slowly being cut anyway. I think OPEC only get nervous when the price of crude drops below US $80, anything with a 7 in handle, you can actually see the news start to come out whenever it starts to go low. So they're concerned, and I think that 75 through to 80 area is an area where OPEC do get worried, and then they start to come out with persuasion in terms of trying to get the price or beef the price back higher.
All right, let's move on to gold. Now, it put on about $35 overnight. Is this the beginning of a further trend upward?
Look, I think it is. it's broken through some significant resistance. We've also had China that's come back on holidays.
Because it did lose 11% in September.
Oh, look, it was a huge move to the downside, and the market is always concerned whether or not it has that ability to move higher. China has come back from the markets, from their holidays, and even this morning we're seeing it out by $7 or $8. So not only did it close high, it's still trading high. So I think there's these expectations that China is going to come back to the market in the gold. It's not just China, China and India, and the prices will start to gravitate back through to that 1700 level.
But given that China has just come back from National Day celebrations for that week-long holiday, how sustainable is that rally then?
Look, let's be guided by what the PPI and CPI data that come out of China this week. Let's be guided by what that actually says. We have noticed that the inflation data out of China is suggesting that the policies are in control. That inflation is actually cooling. If they're not, then the price moves for gold to trade higher are certainly justified.
Jonathan Merritt, we're nearly to time, but I just want to look at the commodity sectors on the whole. In this volatile time when we're seeing these huge swings and drops, not all sectors, not all commodities perform the same. Which do well and which don't necessarily do so well?
Well, I think given the level of optimism that ebbs and flows with confidence in the equity markets, you can follow those commodities that are litmus tests for confidence, and that's pretty much oil and copper. So when you find that confidence in the equity markets is moving, confidence with politicians and things like that, they're suggesting we're coming out of this concern, then those are the markets which will be the most volatile and probably the most firm.
So agriculture and things like that then don't tend to be so affected?
It's not so affected. The only agricultural commodity that does become affected is cotton. And cotton's been under an awful amount of pressure of late that we've actually recommended that as a buy for probably the last week, 2 weeks.
Jonathan Barrett, thanks for joining us.
Thanks, Whitney.